Welcome to the deep dive. Today we're going deep on financial regulations, specifically a chapter from Mandate for Leadership, the Conservative Promise, called Financial Regulatory Agencies. It's kind of like a sneak peek into potential changes coming down the pike.
Yeah, always interesting to see where people think, you know, the future of finance is headed, especially with, how complicated things are now.
Right. And this document really digs into that. Like even with the good intentions behind stuff like the Securities Act and the Securities Exchange Act, things have gotten kind of messy over time.
They definitely highlight that. Saying all that complexity isn't just bad for publicly traded companies. It can actually make it harder for businesses to get funding and even limit investment options for regular people.
So how does this mandate for leadership think we should fix things?
One big idea is a total revamp of the SEC. They're proposing a three-tier system for firms, private, smaller, and public, each with, scaled disclosure requirements and rules for secondary markets.
Hold on, before we get too far, can you just quickly explain what a secondary market is, just so everyone's on the same page?
Sure, think of it like the stock market. That's a secondary market. It's where stocks are bought and sold after a company initially issues them. So this tiered system would affect how those markets work for different types of companies.
Got it. Thanks for clarifying. So this tiered system for the SEC, what's the logic behind that?
Well, the idea is to make the regulations fit the company. Like a huge corporation shouldn't have to deal with the same rules as a tiny startup. Makes compliance less of a burden, especially for smaller firms. And it lets the SEC, focus on its main job.
Streamlining things so everyone can thrive. Okay, I got to ask about this one. This document proposes getting rid of the PCAOB and FINRA. Is that a bit extreme?
I thought so too. The argument is these organizations, while, started with good intentions, have gotten inefficient and resistant to change. The mandate suggests rolling their duties into the SEC.
But wouldn't that make the SEC even bigger? What about protecting investors? Isn't FINRA involved in that?
They are, and it's a big point of debate. The document claims this consolidation would actually make things more transparent and accountable, but there are definitely concerns about whether investors would be protected enough. It's a trade-off, for sure.
So less bureaucracy maybe, but also potential risks. Got it. What else is in this mandate?
A lot of focus on boosting entrepreneurship, making it easier for businesses to get the funding they need. They talk about simplifying things like Regulation A and Regulation CF, which deal with fundraising and crowdfunding for smaller companies.
Right. Those can be real roadblocks for startups. What exactly are they suggesting?
Basically making it easier for small businesses to look for funding and for everyday investors to participate. They propose maybe even getting rid of the definition of accredited investor altogether, which could open things up to a lot more people.
Interesting, kind of democratizing investment in a way, but I can also see some potential problems there. How do you make sure those everyday investors are, making informed decisions and not getting taken advantage of?
That's a great question. And to be honest, the document doesn't really address investor education or protection mechanisms. It definitely leaves a lot of problems unanswered.
Potential for growth, but also potential for, let's just say, unintended consequences.
Exactly, and it highlights just how important it would be to implement these ideas carefully and thoughtfully if they were to actually happen.
This document is like a starting point for some serious discussions. What other interesting ideas did you find?
Well, there's this proposal about blue sky laws. Those are state-level regulations for securities. The mandate suggests doing away with those for stocks traded on established markets.
Hang on, back up a sec. For those of us who haven't been, deep in finance land lately, what are blue sky laws, and why would anyone want to get rid of them?
Imagine you're a company going public trying to sell stock nationwide. Right now, you might have to deal with different rules in each state. It's a mess. Blue sky laws are meant to protect investors from fraud, but the document argues that for stocks on member exchanges, they're unnecessary. They just create extra obstacles.
So the argument is that for bigger companies, there are already enough federal regulations in place to protect investors, and the blue sky laws are just red tape.
Right. They think a single national standard would be much more efficient, make it easier for companies to operate, like having one speed limit for the whole country instead of a different one on every block.
Okay, I get the analogy. But wouldn't this mean states lose some control over financial markets? That's bound to be controversial.
Absolutely. You'd have states' rights advocates pushing back, for sure. It raises questions about, who should have the power, state or federal regulators.
Like a tug-of-war states trying to protect their residents, but a national system aiming for consistency. This mandate is really shaking things up. Anything else on their reform agenda?
This one might surprise you. They want to scrap the consolidated audit trail, or CPT.
Sounds kind of ominous. What's that? And why get rid of it?
It's a program that tracks every single order and transaction in the U.S. stock and options markets. It's supposed to be this huge database that regulators can use to find illegal activity and prevent another financial crisis. But it's been controversial from the start.
Why is that?
The document points out concerns about its cost, how complicated it is, plus potential privacy issues. Critics say it's a bureaucratic mess that hasn't really done what it was supposed to. They say it's a burden on the industry without much benefit.
Classic case of good intentions, bad execution.
You could say that. It shows how even regulations that start with good goals can have unintended consequences, and how important it is to always be evaluating and reforming them.
We can't just set rules and forget about them. Things change, technology evolves, and regulations need to keep up. Speaking of which, what does this mandate say about digital assets, all that crypto stuff?
This is where things get really interesting. With cryptocurrencies and all these other digital assets becoming more mainstream, there's a real need for clearer rules. This document proposes expanding the legal definition of a commodity to include them.
Wow, that's a big one. What would that actually mean?
It would determine how those assets are regulated. Right now, it's all kind of murky. Some digital assets are treated as securities, others as commodities, some are somewhere in between.
So it's confusing for investors, businesses, probably even the regulators themselves.
Exactly. This proposal wants to create a more consistent system for digital assets. They think it would encourage innovation while still protecting investors.
I'm seeing a pattern here, a push for simplifying streamlining, making things easier for businesses, but hopefully also benefiting investors in the long run.
You've got it. Less red tape, more clarity, and a belief that a freer market leads to more prosperity for everyone.
But of course, there's always that question in the back of your mind. At what cost? Are there risks to getting rid of regulations? Is there a point where less oversight actually does more harm than good?
Those are the tough questions. And it's where things get really complicated. It's not just about economics. It's about values and priorities and finding a balance between different interests.
Finding that sweet spot. Enough regulation to protect people, but not so much that it stops innovation from happening.
Exactly. And that's why these conversations are so important. We need to really look at these proposals, weigh the potential good and bad, and decide what kind of financial system we want for the future.
It's been an eye-opening deep dive. This document is a springboard for some serious thinking. What other intriguing proposals did you find?
Well, there's one that tackles something called SROs, short for self-regulatory organizations. These are like industry groups that set and enforce rules for their members, like FINRA for the brokerage industry.
Okay, I've heard of FINRA. What's the mandate suggesting we do about SROs?
It's all about increasing accountability and transparency. They propose things like making FINRA board meetings and hearings public, so everyone can see how decisions are made. They also want SROs to publish proposed rules for public comment before sending them to the SEC.
Sounds like a push for more openness, making sure these SROs aren't operating in the shadows.
Exactly.
Yeah.
And there's another interesting proposal. It involves where the money from SRO fines goes. Right now, SROs can keep some of the fines they collect.
Wait, really? That doesn't seem right. Shouldn't that money go back to investors or something?
A lot of people think so. The mandate agrees. They propose making sure all those fines go either to an investor reimbursement fund or directly to the Treasury. That way, there's no financial incentive for SROs to go overboard with fines.
That's a good point. It removes any temptation to, fine people just to pad their own budgets.
Makes sense. So we've got SROs under the microscope. What other regulatory hot potatoes are they tackling?
Well, there's one we can't avoid talking about, the Consumer Financial Protection Bureau, or CFPB. This one's a real lightning rod. Some people even want to abolish it altogether.
Oh yeah, the CFPB, we've all heard about it. Why is it so controversial? It comes down to different opinions about how much the government should be involved in regulating financial markets. Some people see the CFPB as a crucial watchdog, protecting consumers from predatory lenders and unfair practices. Others see it as a bureaucratic monster that stifles innovation and hurts businesses.
Two very different views of the same agency. What are the arguments for keeping the CFPB, or at least reforming it, instead of just getting rid of it?
Supporters point to its track record. They say the CFPB has taken action against companies that were harming consumers and gotten billions of dollars back for those people. They argue that without a dedicated agency focused solely on consumer protection, those folks would be a lot more vulnerable.
So it's like having a specialized unit that's just focused on making sure everyday people aren't getting ripped off by banks or lenders.
Exactly. They also say the CFPB has done good work promoting financial literacy and education, helping people make smarter decisions with their money.
Okay, I can see that. But this document also brings up some serious concerns about the CFPB, especially how it's structured and funded.
Right. Critics say that because it's an independent agency without direct oversight from Congress, it's too powerful and not accountable enough. And they don't like that its funding comes straight from the Federal Reserve instead of going through Congress.
Did there used to be a court case about that funding structure? What happened with that?
The Fifth Circuit Court of Appeals actually ruled that the CFPB's funding is unconstitutional. And now it's headed to the Supreme Court.
Yeah.
It's a huge legal battle that could really determine the future of the CFPB.
Wow. So the stakes are pretty high. What happens if the Supreme Court agrees with the Fifth Circuit and says the CFPB's funding is unconstitutional?
Good question. It could really weaken my agency. Maybe force it to restructure or cut way back on what it does. Or maybe Congress would step in and create a new funding mechanism. It's hard to say for sure.
A lot of uncertainty there. And all of this is happening while this mandate for leadership seems to be pushing for less regulation overall.
That's fair to say. They definitely prefer less government involvement in the market. They think businesses and consumers can mostly regulate themselves without much interference.
But surely they recognize that there needs to be some level of consumer protection.
Right.
I mean, we've seen what happens when financial institutions are left unchecked.
They do acknowledge that, but they think consumer protection can be achieved in other ways, like through competition and individual responsibility, instead of relying on a powerful agency like the CFPB.
So it's a fundamental difference in philosophy. More faith in the free market to self-correct versus a belief that you need strong regulation to prevent abuse.
Exactly. And that's why the CFPB is such a hot topic. It's not just about one agency. It's about a bigger debate over the role of government in the economy.
It's like we're seeing two different visions for the future of finance. One with a strong government hand guiding things, the other with a lighter touch relying more on market forces.
And each vision has its own potential benefits and risks. It's complicated. No easy answers.
Makes you think. So we've got this debate about the CFPB and its future. But even beyond that specific agency, it seems like this mandate for leadership wants us to rethink how we approach financial regulation overall.
You're right. It's not just about tweaking a few rules here and there. It's a call to fundamentally reassess the balance between regulation and free market principles.
Yeah, as we've seen, that balance is always shifting, depending on politics and technology and the economy.
Exactly. It's a dynamic landscape. Staying informed about these debates is crucial for anyone who wants to understand what's shaping the financial world.
Well said. We've covered a lot today, from streamlining regulations to boosting entrepreneurship to the complexities of the CFPB. But there's still more to unpack in this mandate for leadership, so join us for part 2, where we'll dive even deeper into these proposed reforms and their potential impact on the future of finance.
Welcome back to the deep dive. As we dig deeper into these proposed changes, it's clear that they're really focused on encouraging investment, especially for everyday Americans.
It's like they're trying to, open up the world of finance to people who maybe felt left out before.
Right.
But as we said before, it's got to be about balance,
Yeah.
opportunity, and protection.
Totally. And that brings us back to something we touched on earlier, the Consumer Financial Protection Bureau, or CFPB.
Ah, the CFPB. That's a big one.
Yeah.
We talked about some of the criticisms of it earlier, but let's unpack that a bit more. Why is this such a controversial topic?
It all comes down to different views on the government's role in regulating financial markets. Some see the CFPB as this essential watchdog, protecting consumers from predatory lending and unfair practices. Others see it as this overreaching bureaucracy that stifles innovation and burdens businesses.
So two very different perspectives on the same agency. What are the arguments in favor of keeping the CFPB around, or at least reforming it instead of just getting rid of it completely?
Supporters of the CFPB point to the stuff it's already done. They say it's taken action against companies that were harming consumers and gotten billions of dollars back for those people. They argue that without a dedicated agency focused solely on consumer protection, those folks would be much more vulnerable.
So it's like having a specialized unit whose only job is to make sure the average person isn't getting taken advantage of by banks or lenders.
Exactly. And they also point out that the CFPB has done a lot to promote financial literacy and education, helping people make smarter decisions with their money.
That's a good point. Knowledge is power, especially when it comes to your finances. But the document does raise some serious concerns about the CFPB, particularly its structure and funding.
Right. Critics don't like that it's an independent agency. They say that because it's not directly accountable to Congress, it has too much power and not enough oversight. And they also question its funding mechanism, which comes straight from the Federal Reserve instead of being approved by Congress.
I remember reading about a court case challenging that funding setup. Whatever happened with that?
Well, the Fifth Circuit Court of Appeals ruled that the way the CFPB is funded is unconstitutional. And now the case is on its way to the Supreme Court. It's a pretty major legal battle that could really determine the future of the CFPB.
Wow, talk about high stakes. What happens if the Supreme Court sides with the Fifth Circuit and says the CFPB's funding is unconstitutional?
It's hard to say for sure, but it could be a big blow to the agency. It might have to completely restructure or drastically cut back on what it does, or maybe Congress would step in and create a new way to fund it. It's a real wait-and-see situation.
A lot of uncertainty hanging over it. And all of this is playing out against the backdrop of this mandate for leadership, which seems to be advocating for a more hands-off approach to regulation in general.
I think that's a fair assessment. They definitely lean towards less government involvement in the market. Their philosophy seems to be that businesses and consumers can mostly regulate themselves without much interference.
But even they must recognize that some level of consumer protection is necessary. Right. I mean, we've all seen what can happen when financial institutions are left to their own devices.
They do acknowledge the need for consumer protection, but they think it can be achieved in different ways, like through market competition and encouraging individual responsibility, instead of relying on a powerful regulatory agency like the CFPB.
So it's a fundamental difference in how they view things.
Mm-hmm.
More faith in the free market to self-correct versus a belief that you need strong regulations to prevent abuse.
Exactly. And that's at the heart of the CFPB debate. It's not just about one agency. It's a much bigger conversation about the role of government in the economy.
It's like two different visions for the future of finance are clashing. One where the government takes a strong hand in guiding things, and the other where it takes a more hands-off approach, relying more on market forces.
And each vision has its own potential benefits and risks. It's a complex issue with no simple answers.
It definitely makes you think. So we've got this ongoing debate about the CFPB and what its future holds. But even beyond that specific agency, it seems like this mandate for leadership is calling for a pretty significant shift in how we think about financial regulation as a whole.
You're picking up on a key theme here. It's not just about making a few tweaks to the rules. It's a call to step back and really reassess that balance between regulation and free market principles.
And as we've seen, that balance is constantly in flux. It changes with politics, technology, and the economy.
You got it. It's a dynamic landscape, and staying informed about these debates is really important for anyone who wants to understand the forces shaping the financial world.
Well said. We've covered a lot of ground today, from the CFPB to this broader push for regulatory reform, but there's still more to unpack in this mandate for leadership. So join us for part 3, where we'll continue our exploration of these proposals and their potential impact on the future of finance. Welcome back to the Deep Dive. As we wrap up this look at the mandate for leadership, one thing that really sticks out is how much it emphasizes, keeping up with the times, especially when it comes to technology.
It's like they're trying to make sure the financial system isn't left behind, with all the changes technology is bringing. And one area where that's really important is artificial intelligence, AI, and machine learning.
Oh, yeah, for sure. AI is already changing so many industries, and finance is definitely right there in the thick of it. But this document doesn't actually mention AI directly, does it?
Not specifically, no. But it does stress how important it is for regulators to embrace new technologies and really understand how they're affecting financial markets. It's kind of reading between the lines, but the message is definitely there.
So what would a tech-forward approach to regulation actually look like? Can you give us an example?
Imagine regulators using AI to sort through huge amounts of data and find, market manipulation or fraud that humans might miss. Or think about how technology could streamline compliance, make it easier for businesses to follow the rules without being buried in paperwork.
That makes a lot of sense.
Yeah.
Using technology to make regulation itself more efficient and effective.
Exactly. And it could also involve things like regulatory sandboxes. These are like controlled environments where fintech startups can test out new products and services before they go mainstream. It lets regulators assess the risks and benefits without, putting the whole system at risk.
I like that idea. It's like a proving ground for new financial tech, making sure it's safe for consumers, but also giving innovators room to experiment and grow.
Right. It's all about finding that balance between encouraging innovation and protecting the integrity of the financial system.
Okay, so we've explored this vision of a more streamlined, adaptable regulatory system. But how realistic is any of this? Do you think these proposals could actually be implemented?
That's the big question. And honestly, it's impossible to say for sure. Remember, this is just one perspective, a conservative blueprint. It's bound to face pushback, debate, and political wrangling.
So it's more like a starting point than a finished product.
Exactly. The financial industry is huge and powerful. Any changes to the rules are going to create winners and losers, and there will be a lot of lobbying and negotiating involved.
It's like a giant game of chess with all these powerful players making their moves.
Great analogy. And that's why it's so important for people to stay informed, to understand the different viewpoints and interests at play. These debates about financial regulation aren't just theoretical, they have real-world consequences for businesses, investors, and the economy as a whole.
It's definitely been an eye-opening deep dive. I feel like I have a much better understanding of just how complicated financial regulation is and the challenges of finding that right balance between protecting people and encouraging innovation.
Me too. It's been a really interesting conversation, and I think it highlights how important it is to keep talking about these issues and thinking critically about how we want to shape the future of finance.
As we wrap up this episode, what's the one thing you want our listeners to take away from all of this?
I think the most important message is that financial regulation isn't just about, abstract rules and numbers. It's about building a system that's fair, stable, and accessible to everyone. It's about striking that balance between safeguarding consumers and promoting economic growth. And it's a conversation that requires careful thought debate and a willingness to adapt to the changing world.
Well said. Thank you so much for joining us on this deep dive into the world of financial regulation. We hope you found it informative and thought-provoking.
It's been my pleasure. And remember, this conversation doesn't end here. Stay informed, engage with your elected officials, and make your voice heard in shaping the future of finance.